Hello, hi, this is Martin from seekedge, the channel for trading and investment. This is the weekly market analysis for the week that's beginning June 14th, Monday 2021. So let's look at what happened in the market last week. So what are the price actions and patterns that got formed on the market the last week? So what do we see here? The sixth consecutive weekly higher highs and all-time highs happened in the market. Nifty, if you see, it's a sixth time. Let's see what does it mean. So this is the weekly charts. If you just you can clearly see that on the weekly charts the green candles are happening 1 2 3 4 5 6 times higher highs. That's what the weekly latest candle that we see is a spinning top. We know that spinning top is bearish, right? But it's green, so any spinning top is indecision, and especially in the top it's something to be cautioned. But it's a green weekly, so it should be okay probably. And what about the daily candles that you see here? You can see that it has a clean, a doji. A doji is pure indecisive, right? Spinning top on weekly and a doji, but it's 6 consecutive week that we are having a higher high. Now the price can be seen clearly that it's moving. If you look at, you can see that it's moving along the Bollinger Bands. If you have a look here, let's go to the chart and see the Bollinger Bands. If you look at the Nifty 50, you can clearly see that it's near and it's walking on the bands. These are the bands. So the volatility skews here for a long period of time, and has been for the last 2 weeks. It has been walking on the bands, and even now it just deviated slightly from the band, and then again it is climbing back on the band. It's very close to the band. Now the Nifty last week, what exactly happened? Nifty did a correction slightly and went to 15,566 levels last week, and then climbed back. Bank Nifty, it's at 650 points and then recovered and climbed back, right? So let's finish with the Nifty first. Nifty, if you see what exactly happened, you can say this is day 1, day 2, day 3. So 1 2 3 4 5, right? It's 5 days. It did a dip, and then this is the week starting, and a dip and then climb back, and exactly the same thing, right? 1 2 3 4 5 days, did a dip and then climb back. It still does not cross that, right? And what is the last candle? What's the last candle? It's bearish, right? It's a kind of a, it's not actually a hammer pattern that you see, but on the weekly we see that it's a clear hammer that you're seeing, right? Let's just delete this and then let's clean it up. You can see it's a hammer. So Nifty has a bearish hammer, but Nifty did the same. It dipped and it corrected and then moved up. Bank Nifty, if you see the chart patterns, you can see that almost all the days last week, daily, if you see all the 5 days, it's all red candles except one day, and the expiry day, Thursday. So that's a pattern that it's some amount of caution or bearishness can be seen from the candle pattern and price band, but at the same time, the price action is making higher highs and it's bullish. But the candle patterns are sometimes scary. The corrections are happening. It's happening. The move up is steady but slow and steady. That's what is happening. Right? Let's move ahead and see what are the support and resistance levels that we can see for to decide on how we go about trading for the next week. So it is on these levels that we select our strikes for the options and futures and all this buying and selling position, the exit strike, the risk reward, everything is based on on the support and the resistance levels, which can be derived from different. The support and the resistance level can be found by a confluence of many things. You can look at the pivots, you can look at the previous resistance areas, you can look at change in polarity, you can look at the moving average, you can look at the divergence levels. So multiple ways to identify the support and resistances, and it is based on this that we take the trades. That is why we move on to support resistance. You can see that Nifty has support levels at 15,600 levels. Why it is a support level? Because it bounced from there. Okay? And the fib support levels can be seen at 15,430 and 15,330 levels. Why it is a support? Because it's multiple things there. It's 23 Fibonacci retracement level, it's moving average 20-day, and then previous resistance. All of this comes together and says that near 430 for that band 15,430 and 15,330 is the level which could be a very good support for me in case there is retracement. But we have 15,600 levels, previous resistance area, that's above that. Now upwards, if you see resistances, first resistance will be the all-time high, has to be taken out. Then beyond that, 16,000 is hardly less than 200 points away, right? But it's a psychological rounding number resistance that you can see there. The fib extension also shows that resistance area. So look at what we are seeing there, Nifty. Right? You can see that the fib, right? So why do we say which are the levels that we talked about? We talked about this level, right? 15,600 level and this level, 15,400 level, which is a moving average and which is a fib 23 support, right? So let's see what are there is a reason for marking these supports, right? Supports because it's a resistance that was broken out, support because of the area where there is a moving average, and support because it's a fib. Below, if you see, 50 also you have a support, that is 15,050 levels. If it breaks this, it will fall. So 3 clear supports and 1 resistance is all time, and beyond that it's a rounding number 16,000, which is the upward. Let's see the same thing in Bank Nifty. What does it say? Bank Nifty has taken a CIP, change in polarity, bounce from the previous resistance area at 34,300 and 34,600 levels, right? So that CIP area, currently it is at a 20 moving average and 34,800 levels. So that band will be the first support levels. Beyond that, if that breaks, we have 33,500 levels, which happen to be fib 61 levels. Anything below 61 is a bearishness confirmed, right? The fib retracement of the last swing that we are talking about. Now the resistance upwards is 35,800 levels, which happened to the previous resistance zone, which is also a fib 23 resistance area. And then beyond that, you have the previous resistance areas of 36,500 and 37,700, which is all-time high. You can clearly see these things here, right? Look at the supports that we talked about. What supports did I mention? I mentioned that this is a moving average. So Bank Nifty is residing on the support. So this area is nothing but 34,800 levels, right? But near to that, you can see that there is a resistance at 38 Fibonacci. Below that, you can see that there is a support at 61 Fibonacci levels, right? That is 33,500. If it breaks, everything breaks loose. The last support that you have, this band of 2, this area of 34,500 and 34,300, that band is the major support. So this Nifty is a very good support level, you can say. And moving up, resistances are very clearly defined, right? You have fib resistance first, then you have a previous resistance there, then you have an all-time high resistance level. So all these are the resistances that is marked and mentioned here, right? Let's move ahead. Momentum and trend analysis. So price action and support and resistance are found, means the next critical thing that we have to see is, right, although the price, do we have the momentum that is there? Does the price action have enough momentum? Right? What does it say? So daily, weekly, monthly, all are the momentum is in the bullish zones, right? Now Last week we talked about a 6-bar bullish posterior reverse divergence which worked out and met its target yesterday. Day for yesterday, the 2 days of rally move, it met its target. The very small targeted divergence which is bullish was there on the momentum. Now this week we have something little bit worried about, which is there is a bearish divergence on the daily chart of Nifty, right? So which could pull it back to 5600 levels if it works out, right? And that is about the momentum. So momentum is very good and it's in the bullish zones, but at the same time we have a divergence which worked out last week and a bearish divergence which may work out. It's not guaranteed, but it may work out. Let's see what are we talking about. You can see that so the divergence was actually here, this area, which worked out. That is why Nifty went out bullish. Now what you're seeing here is a divergence here and here. That is, the price is heading up and then it's a bearish divergence on the top if you mark it, right? It's a bearish divergence. The momentum is dipping and the price is going up, right? So that may pull the market back to this levels of 600. It's a small targeted divergence which is likely. That means there is a correction, one more correction that can happen after a small up move, which can pull it back to 600 levels, is what is clear. Now, once we know the momentum, the next thing that we need to know, what is the strength of the trend? Now, is it trending? It may have momentum, but is the market trending? This helps us decide, take the positions accordingly. So trend, if you see, we use the ADX indicator, Wells Fargo does it. ADX indicator, trend indicator, strength is rising again. It dipped a little bit on the Nifty, and it's sufficiently bullish on all the time frames, the short, medium and long time. All time frames, the bullishness is having enough strength and it's rising is what we can see, right? So let's see what in Bank Nifty. Before that, Bank Nifty momentum and ADX, will come to that later, but Nifty, let's look at what is happening. So you can see that the moment is moving, it's in the bullish zones and the strength of the momentum is moving up. Okay, now let's see what is happening in the Bank Nifty's ADX. I'm sorry, I talked about trend, not momentum. So you can see that the trend is slightly dipping, and a crossover has happened. It is currently in the bearish zones, but it's not having enough strength. That's what we are talking about. Bank Nifty ADX indicator crossed out to the bearish zones, on the daily time from last week, but the strength is not rising. Right? The trend of the Bank Nifty continued to be in the bullish side on the medium and the long term, right? But the strength is flat. What does that mean? So medium term is the weekly charts. So what does that show? It is still in the bullish zones. We don't have any trend issues on the weekly charts and the monthly also. We can see that it's in the bullish zones and it is rising, right? Absolutely no issue. Let's go back to the daily. So Bank Nifty, the trend is on the short term is not good, but in the medium term and the long term it is flat, and it's the bullish zones. On the short term it's not even in the bullish zones, right? So Bank Nifty has a momentum. If you look at it, it has dipped into the sideways zones, right? Weekly has a range shift from the sideways to the bearish zones, right? So range shift is something that is good, from the it has moved from the sideways to, right, showing a range shift from sideways to bearish zones, which is not good actually, right? Now, so let us see what are we talking about. Bank Nifty daily dipped into sideways zones, right? So let's see the Bank Nifty's momentum. We can see that it is resisting. It tried to climb up to the bullish zones, but it dipped, right? So that is what the momentum is, what we are seeing now. It is showing a range shift on the weekly is what, so that is what it is talking about, right? So if weekly charts, if you see, it was in the sideways and it climbed, and then if it hits here and then we can see that there is a more bullish momentum that can happen. That's what we are talking about. So range shift is Actually, yeah. So it's a bullish zones actually. Right? There's a correction there. So bang. So this is what has happened. Bank Nifty. Right? If a range shift happens, it is fine. Right? It's a good thing. Range shift is. I'll explain that briefly. Right? The momentum had dipped earlier, previous weeks. Now it is climbed, but dipping again. Dipping again is to bounce back again. So that way, momentum is good, is what is meant there. So momentum of Nifty we have seen, the momentum of the Bank Nifty also we have seen, trend also we have seen. So I'll summarize just once more. The momentum is intact in all time frames on Nifty. Momentum has a slight bearishness divergence due to the divergence on the Nifty. Bank Nifty has a range shift that has happened on the weekly, which is positive, but overall Bank Nifty momentum has dipped. Right? It's not. It's slightly bearish, you can say. Right? It is dipped in the side, sideways one. So weekly there is a range which is good if it works out. And trend, if you look at trend, is bullish. No time, it's rising again. The Nifty, it's very good. Bank Nifty, the trend indicator is it's still in the bearish zones, but it's not having very much strength overall. It's a summary. Let's move ahead and see the open interest analysis. So till now we had been seeing the charts and studying the chart patterns, and then the levels where it is taking, the price action is taking support, the divergence in the momentum and trend indicators and all that. Now this has to correlate, and why we are studying the open interest analysis. Open interest is nothing but it's all futures and options, the derivative analysis. What we saw earlier is it's a basic Nifty index charts, which is price action that you can see on the index, right? But now we need to look at the derivatives data, because we'll be trading mostly on the options and the futures, not on not on the index directly, right? So open interest on the futures is showing that what it's showing a long build up, but on the Nifty, but on the Bank Nifty is showing a short build up. So it's it's exactly matching what we understood from the charts. Now open interest, the highest option open interest can be seen as 16,000. That means that is where the highest resistance could be. 15,800 also has got lot of call rating. So the major resistance is these two levels, 15,800 and 16,000. Right. The call environment is 15,700 happened last week, which can also be seen. Now let us go and see what are we talking about. Right. Interest, right? 16,000, 15,800, highest call rating. Now it continues to show us that for the same expiry you have the highest writing that has happened in 15,000, highest put writing. Support that 15,000 support also can be seen as 15,700 levels. That's immediate support. This probably may be hedge positions that people have taken. These put writings might be written for the hedge positions. The market not like to fall that much. But the immediate support of highest call rating is 15,700. You can take that as below that also you have good support levels that you can see. Now, what is the scenario for Bank Nifty? What we are seeing is, what are we seeing here? Bank Nifty has got highest call and put rating is 35,000, right? And the resistance seen is 35,500. Right? So wherever the call rating is there, that's where the resistance. Right? And let's see what are we talking about, right? 35,000 is where the where the bulls and the bears are fighting. I don't conquer that place. So straddles may be there at this position, and this is where the highest call and put writing both. Actually, the highest it is conquered. Actually, 35,000 is conquered. Instead, ATM strike is 35,200. So 35,000 is the major support, you can say, and you can see that the major resistance is 35,500, and all resistances are there for the below down. Right. PCR is still in the bearish 0.7. It has dipped to 0.4 or something like that. 6.65 something. Slightly increased, but put ratio overall for the next study it's bearish for Bank Nifty. For Nifty, its PCR ratio is 1.04. It's not greatly bullish, but it is bullishness which has come back in last Friday's move. Now, put call ratio is what we talked about. It's Bank Nifty is not bullish and Nifty is bullish. You can see levels of support based on the open interest data. Futures and option we are seeing. Now, the next point that we are looking at is volatility. Right? What VIX is the greed and fear index, which has fallen again 7% last week and settled at 1448. It's very low VIX regime that we have. Implied volatility of Nifty is above the historical implied volatility, and the IV percentile remains at very low level of 0.5 levels, which is again, so overall the volatility is very less. So since it's mean reverting, volatility can shoot up where the option buyers will benefit, and if it is shooting up and then again dipping, that's the time when the option sellers will be, right? So it's a shift in the volatility regime that is currently going through. That's all that we can talk about volatility. Look at the sector watch. We are covering this, how the sectors have been performing for the last week. If you see that the IT, the metal, the energy, the auto, infra, FMCG, farm, all sectors are having bullish momentum. So what do I mean by that? I say it's all having bullish momentum. Now let's just take metal. Let's just see what is happening in metal. So this is a daily chart. This is the monthly chart. If you see, it's in the bullish zones. It's walking on the bands and heading. This is a weekly. It has taken a dip and then again heading back. It's a resistance zone here and then it's bouncing back. Clearly bullish on the momentum is intact. Monthly we are seeing, weekly we are seeing, and daily also if you see, it is bouncing back. It is doing a small kind of range shift kind of thing and then moving back. Intact momentum, and then if this momentum area is crossed, means we have bullishness to continue, right? Now, so that is how we analyze the the indexes of the sector and see whether how the sector is performing. Just hold on a second. I will just put the charger. Yeah, I'm back. So sector watch. The metal sector shows. So we're all very much in the bullish zones, but when you're taking a trade for a weekly basis or a swing or position basis, we have to look at which one is how we go is a. First we would analyze the sector, which sector is strong, and see which are the top. See the charts for which are the strong stocks in that sector, and then based on the price patterns and what charts tells you, pick up those which are the best in the best sector. That's how we approach. That we look at metals are shown weekly as well as metals are bullish, but what we have to see is weekly and daily there is a bearish divergence in the momentum, which is something that you have to be cautious about. Instead of jumping straightly into any of the metal sector stocks, since there is a divergence that can be seen, there is potential that it may take a dip. Metal may have another. So just to show you what that means, here you can see that this is a daily time. The divergence can be marked something like this. See, here you have the price that's going up. Right, so price is going up and then mountains. So this is bearish. The same thing can be seen weekly also. Price is going up and it's coming down. So there could be a small correction that may happen. So we have to be cautious on that. Pharma is also having a bearish divergence. Auto sector has momentum positive reverse divergence, which is actually bullish, right? So this may be a sector where we can see for a to take long positions on the short time frame. So what are we talking about? Auto. Let's see what auto is saying. So auto sector, if you see Nifty auto, we can see that there is something on the daily, right? So here we can see if you do the marking, you can see that there is a, this is what is, you can see that it's bullish, so there is a chance that it can go up. Okay, momentum divergence, bullish, positive reverse divergence we can see here. So let's get back to, so that's the sector. So overall it's bullish, but you have to be careful which sector and how we have to enter also a option. FI participation in the cash market, FIs are buying 3 days except for last sale of the happened on Wednesday. And DAs are buying except for Monday and Friday. It's a net. So net if you see, so if you see the if you summarize net, right, you can see that there is there's own crores of buying that, which is very positive. Right, derivative also net is long. Right? So it's bullishness that the market participant data is showing. Global markets, the US markets are positive. Dow Jones taking momentum support and rating up, while S&P 500, Nasdaq, all the bullish and rating up. Let's quickly see that. What are we talking? Nasdaq daily, right? It's heading up, and that's Dow Jones. Right? It's slightly flat, but you can see that it's taking support at the moment. Moving average. So, what about S&P 500 showing bullish? So global markets, some other markets, US markets are bullish. Dollar index has gained steadily, taking on the 90 levels as before. That is what is happening since some time now. USD INR taken support 73 with 4 green candles. So let's look at first the dollar index. Dollar index, if you see, you can see that it's the same. You can see that it's a green long, wide range candle, green candles, clear bullishness that's happening from the 90 support area, right? This is the support area. From here it is bouncing up. So dollar is gaining strength. USD INR also, dollar is gaining strength, right? It's 1, 2, 3, 4 for consecutive 4 days we are having green. This is finally settling with a hammer. Look at the wick showing that there is bullishness. So it may be a good idea to take trades on this. Gold is consolidating right after the channel break. Let's see what gold is saying. Gold, right? I had marked it yesterday when I had a look. Actually, there's no need of marking. See, it's a channel that is persisting near the channel. The breakout happened and then it's persisting there. So long-term gold, long-term, right? So that's a global market. So, actionable, just 2 points I have to put. Since there is a psychological resistance that is there at 16,000 level is psychologically huge resistance zone. So it makes sense to sell the calls from that point, but always hedge by buying a call option, and so that your risk is defined always. Why your risk has to be defined is because bank Nifty is not supporting. That's why you are seeing that there may be resistance there. But suddenly the bank also joins the rally. Which banks kind of stocks. 16,000 would be a simple 200 points gap up, and that's it, done. So you may lose money. So when you lose money, you will lose it in a defined way in short losses, and when you get it, you have to get it big. So power sectors, you can see, I just noticed that. I have not fully analyzed what the power sectors are doing, but I just thought of mentioning that the results calendar clearly shows that power sector is having Coal India, EFC, Power Grid, NTPC, all are having results next week. So the results, if you know how to play the options and based on the earnings, then next week may be a time for that. Basically, what would happen before the result is the volatility may increase, the price may go up, and then after the results are over, it may crush. So option sellers can make money if they make the right entry at the right time at the right levels. So there is some actionable that happens. So wrap up of this week markets are in a bull run. It's clear enough. Right? At the same time, it's not sudden burst out. It's making periodic corrections, and then slow and steady getting up. So it will hit 16,000 for sure, but it's consolidating before doing that. The banks are not supporting. Banks absolutely not supporting. Bank Nifty continues to be bearish and not supporting. Positional long trades can continue to do that until the point where we get a clear signal saying that support zones are broken. All those support zones that we have earlier put. So if that gives a clear indication, say for example, if the 61 Fibonacci level is broken from the last weeks, that clearly means that its market is correcting. Until then, you don't need to worry if you're a positional player for several months. Intraday, it's a low volatility regime that has happened, so option buyers can benefit if the volatility increase happens. Swing positions and neutral option strategies can also work if there is a consolidation that is happening, but it has to be delta. It has to be delta neutral option strategies with which are with hedges. Can be anflies and condos or spreads. It has to be defined to strategies. So since if a consolidation before the 16k is taken out, then that's a time where delta neutral would work. So this is the wrap up in summary of what weekly. So this same analysis is posted in written format in the blog sites. Please visit there, and then also like this channel, subscribe, give us feedback so that we can improve our content. I wish all of you a happy trading week in the next week.